Okay, I'll call the meeting to order. Was the meeting properly noticed?
Yes, it was.
Clerk, please take roll.
All members are present.
Are there any changes in the agenda? If not, the agenda will stand approved as printed. Any changes in the minutes from September 3rd? Seeing none, the minutes will stand approved as printed. So we'll allow public participation as we go through. So first thing on the agenda is the 2024 audit, and Amber's going to be virtually on that.
Good morning. Can you guys hear me okay?
Yes.
Okay. Okay, let me just share my screen and I'll walk you through, if it's okay, if I can share my screen, I'll walk you through the couple pages of the financial statements I wanted to go through.
That'd be fine.
Okay. Give me a second. I didn't want to say share. Okay, you guys can see the financial statements, correct?
No, now we can.
Okay.
Go ahead.
Okay, sounds good. So for the 2024 audit, we were able to get through all of our testing, and the results of our testing were that, in our opinion, the financial statements presented fairly in all material respects, the financial position of the county, all the various different activities and fund level information that we review. This is what the county strives for. The county strives for having this quote unquote clean opinion. And we appreciate everybody that's worked with us in the past year to get all the testing completed and work through everything, because we did have a fair amount of different programs that we did test this year for the single audit in particular, but then also just different accounting rules and everything that went into effect this year. Speaking of a new accounting rule that went into effect, down here at the bottom of the opinion letter, you'll see emphasis of matter. And it states that effective January 1st, the county implemented GASB Statement 101 compensated absences. So this is your, PTO, your vacation sick leave accrual, those kind of leaves that are allowed to accrue and then be paid out. So the way the rule looked at things a little differently. It wasn't just, tracking the amount that might get paid out based on policy at retirement or something like that. It also wanted you to include other types of leave, or just even what amount of leave from like the sick leave bank or the PTO bank that somebody might use just because they are sick or something like that, not just what's going to just accumulate and be paid out at year end. The ultimate result in this change to the county's financial statements was a $200,000 increase in the liabilities. The business type activities, so your highway and solid waste, saw a combined increase of about $25,000, $26,000, somewhere around there. And then the governmental activities, so all your governmental funds combined on that statement of net position increased 175,000. Every county, every municipality, every school district had to implement this standard. Some of the school districts are currently implementing right now. And we've seen varying dollar amounts or various impact to this standard. One other thing that also had to be added to this is the calculation of the FICA tax that gets added whenever you pay out the balance. Before, that wasn't required to be picked up. Now it was. So that was the biggest financial statement accounting change that we had to deal with this year. And so we did spend a lot of time looking at the county's policies and working with Carol and Kyle to identify what needed to be picked up. So again, that will be a change. 200,000, not necessarily as big as I've seen for other places, but it is, again, a difference that you will see throughout these financial statements. Moving then, we're going to go into the balance sheet discussion. And I have to get a few more pages down here. For your governmental funds, similar in years, we've talked about your governmental funds, focusing a lot more on the general fund and some of your more significant funds. So at 12/31, your general fund had $27 million in total assets, mainly in taxes receivable and cash investments, similar to what you'd see at a lot of counties. You had liabilities of just under $1.4 million. accounts payable and accrued liabilities making up the majority of this difference. The accrued the accrued liabilities, that's going to be your accrued payroll that got paid out after the end of the year and related payroll liabilities for the most part. Your deferred inflows of resources were just under $12.8 million. The majority was taxes levied for the next year. So those are the taxes that are levied in November every year, but then get shown as revenue in the following year. And the net difference overall is your fund balance. So just under $13.1 million. As we've talked before, there's various different categories of fund balance. The non-spendable is going to be prepaids and your delinquent taxes, stuff that has either been spent for next year already, so the cash is out the door, or with delinquent taxes, there's just an uncertainty of when those payments are going to come in, so they're just not really in spendable form right now at the end of the year. Restricted amounts, those are amounts that you get from a third party that third party tells you what to spend it on, or there's some sort of state legislation that tells you can only spend the net revenues from this particular fee on something in that particular aspect or that particular program. Committed and assigned funds, this is up to more the county's discretion. Committed funds are supposed to be projects that are formally committed by ordinance or resolution that the board has determined we're going to spend this and these items on these projects. And then assigned is more tentative management plans. There's a lot more detail of what makes up these numbers back on page 81 and 82. I'm not going to dive into them because there weren't significant changes of it. I will say this assigned fund balance, a good chunk of this is just about $1 million, maybe a little bit more, that you decided that you were going to use to balance the budget for 2025. So assuming that you end up needing to use all that, that amount could decrease. Unassigned fund balance is the amount that's then left over for unanticipated revenues or unanticipated expenses or unanticipated cash flow shortages. The county has a policy that this amount, this $8.7 million, needs to be within 15 to 20% of budgeted expenses and transfers. So right now, this amount as of 12/31/24 puts you at 45%, so you are meeting your policy. From an industry perspective, we always like to see somewhere between 15 to 25%, maybe 30%, and it does vary depending on each county because each county has different activities that they have, different cash flow, timing of different things, timing of debt, timing of just regular payroll and regular other expenditures to keep in mind when they're coming up with their policy. But overall, you're meeting your policy and you're meeting what we would expect to see from an industry perspective. Are there any questions on the general fund? Okay.
Yes, we do. Just one
Okay.
second.
Amber, the fund balance you listed was 13 million. Is that correct?
Correct. In
And
total.
then- yeah. And then, well, that was for 25. Not
Yeah,
20.
1/1/25. 1/1/25.
For
Okay,
the end of 24.
All right. Because I noticed when it comes to our budget, it's part of it's going to get used. So anyway, and the other thing on GASB 101, if I said that right,
Mhm.
government, what is government expenses? And with the different amounts going in different places now, is that something we're going to have to look for in the budget?
Not necessarily. You guys have always kind of put some aside, not necessarily in the budget, but in this assigned line, is amount set aside for compensated absences in there. So the way the accounting rules work is it breaks apart the types of activities into governmental activities and business type activities. So your highway enterprise fund and your solid waste fund are treated as business type activities because they're treated more and they report on the accounting level more like a regular business would. Where your governmental activities are lesser so. So that's going to be your general fund, human services, debt service, capital projects, all rolled into one. So, and that's just how the accounting likes to see the difference, just because they do treat how they record certain items differently. So while there was an increase, it's not something that you haven't already kind of accounted for in your assigned fund balance here to know that if all of a sudden you did have to pay out a lot, you would have certain things covered.
Sorry, I asked. All right. Thanks, Amber.
Supervisor Pease.
Thank you, Mr. Chair. I'd like to go back to that compensated absences. Do we have to, when you look at those numbers, do you come up with a total dollar amount that we have to have set aside? Or do we just have to have a percentage of that? Or how does that work?
It is completely up to the county on what you want to set aside for it. We have some that don't set aside anything and they're just going to pay for it as, do kind of pay as you go, and just account for it that way. Others set aside 100%. I believe you guys actually do set 100% aside for the governmental activities, for the calculation. Others might set aside 50%, knowing that, there's uncertainties too, because depending on how your policy is written, there's uncertainties on that if somebody's going to stay the whole entire time to earn the payout, that kind of thing. So it kind of varies. It depends on what you look long-term at, to, knowing how soon are your payouts coming, can you cover it in a budget if you needed to, or is it something that is you already know you have enough set aside that if something changes, you're good.
Thank you.
Mm-hmm. Any other questions on the general fund? Okay, not seeing any, otherwise just, speak up and stop me. Kind of just gonna jump over a few things on this page. So your human services fund ended at $4.4 million in fund balance. Obviously in a healthy spot that if you have some unanticipated expenditures with institutional holds or something like that, you're covered. I believe that was an increase of just your expenditures were under budget in 24, so you were able to increase your fund balance by $1.5 million in that fund to give you that cushion. The next column over is your County Roads and Bridges Special Revenue Fund. You will see there's a deficit number here of $550,000. Some of the projects came in and spent a little bit more last year, so that did contribute to the deficit. We do see that sometimes happen, especially depending on timing of projects or different things. So it's just something to be aware of, but just again, depends on how your next few years of highway road projects fall into place. Debt service here, you have $8.3 million. Obviously, this is obviously property taxes plus sales tax, what's not been spent or collected or levied for those amounts. Pretty comparable to last year or 2023 in those amounts. Obviously, the more sales tax you get in, the more that money might or that fund might increase. Moving then to your capital projects fund, you have $7.6 million. And so there's obviously multiple capital projects fund in your accounting system that roll up into this, but you have $7.6 million at the end of the year committed to various capital projects throughout the county. Overall, in total, you have $35.6 million in total fund balance. This middle column here is the grand total of a number of other smaller funds that don't necessarily meet the criteria to be shown on these first few pages. Any questions about those items? If not, then I'll just touch on the general fund budget to actual quick, just so you can see how that turned out, obviously, since that's your main operating fund. And so as you notice here, you had 19.3, just 19.2, $19.3 million in total revenues. But you budgeted for 17.7. So you had a positive increase or positive variance in regards to what you had budgeted for compared to your actual revenues that came in. Your total expenditures also had a positive variance. You budgeted for 17.5 and you spent just under 16. So that combined to basically allow you to increase your fund balance. You ended up transferring a little bit more out to the other funds, but your fund balance then actually was able to increase in 2024, just under $1.3 million. Any questions on the general fund budget to actual? If not, then we'll switch gears to the enterprise funds. We'll talk a little bit about highway and solid waste here. So looking mainly at your operating revenues and expenses. So for highway, you had $11 million in operating revenues, just under 10.8 9 for operating expenses. So you had a positive growth, operating income of $179,000 plus some miscellaneous revenues. And so you had an income before transfers and capital contributions of 354,000. There was a transfer out to help cover some projects. So the net result was a small change in net position of $37,000. Obviously, as you know, the highway projects revenues and expenses fluctuate each year depending on the road projects that you're doing for yourself and for the state. So sometimes this revenue number can be higher, sometimes it can be lower, and it does fluctuate because it's all based on the activities that happen throughout the year. Now, in terms of the solid waste fund, this year or 2024, the revenues were $5.3 million, but expenses were 8.7. So you had an operating loss of the $3.4 million. The primary driver in the operating loss was due to getting updated engineered plan numbers for the long-term care and closure costs for the landfill itself. So every so many years, you're required, and then obviously when you finish a cell, because obviously some of this was all being driven by the finalization of the last cell, is you're required to have a study that gives updated numbers of how much it's going to take to close the landfill when you're required to close it, and then how much it's going to, the maintaining costs, for lack of a better way of saying it, for the 40-year period after it closes. So what happened is when those updated numbers came in, they were significantly higher than the last study for various reasons. And so the way the accounting rules work is as the landfill is operating, the expense gets recorded as it's operating because they want to basically see the revenues covering it during when it's operating. You can't really record these expenses once it's closed, kind of thing. So that's why there was such a significant, it was just about $4 million, I believe, in the hit this year. So that's why there's such a big loss this year in the solid waste fund. Any questions on that?
Supervisor Pease and then Supervisor Grabarski.
You said that there was a $552,000 loss in highway, and then you go to this one and it doesn't show up there. How does that correlate?
There's the two different funds. So the $552,000 is your special revenue fund that's just for county maintenance and road projects. And then this is your enterprise fund that also has the billings to the other departments, to the state of Wisconsin, to other municipalities if you're working on it. So they're connected but distinct, but still separate.
Okay, that makes sense then. Thank you.
Okay, Supervisor Grabarski.
Amber, question for you regarding, and this might be better for Kyle or Cynthia, but we have a fund set aside for closure at the landfill. Now, this wasn't available for that, or is it that was that far difference that we'd have to make it up in the closure fund?
The cash that's set aside in those restricted funds are the amounts the DNR is having you put aside in order to pay these ultimate liabilities when you do have to do it. So it helps because you need to put that money aside because when the landfill closes, you're going to need, I think they're projecting you're going to need $6 million to spend on various closure activities. So you putting aside the $2 million or whatever's there right now will help contribute to that. So you're basically putting the money aside as you go. So then when it gets to that point, you'll have the cash on hand to pay for that stuff. What's happening here on the accounting side is we can't, when you're recording the liability part, we can't take into consideration the cash side you already have set aside.
Why not?
That's the way the accounting rules work is you have to show the full liability. You can't net the two.
Thank you.
Yes. Finance Director.
Yep, Mr. Chair. Just kind of want to elaborate on that long-term care and closure liability. So we do have about, I believe it's close to $4 million set aside for the long-term care and closure. And The DNR recently did change the rules where we don't actually have to have that money set aside. We can look at the financial statements for that. We brought this stuff up with the solid waste committee in the past, and we have agreed upon procedures with CLA for them to basically certify that, yes, the county is in good financial standing to be able to pay for the long-term care and closure of the landfill.
Okay,
And then does anybody else have any questions on any financial numbers? Otherwise, I'm just going to briefly talk about the 3 findings we had, and then that was about what I was going to cover today.
I don't see any on this end. Go ahead.
Okay, so then I'm going to switch PDFs here. Just kind of talking, this is in the federal awards PDF if you do have a copy. Otherwise, on the screen, I'll walk you through it. So as I talked before, we had an unmodified opinion on the financial statements overall. But then from the single audit perspective, we also had an unmodified opinion, and we did not have any findings this year on the federal side. We tested the state and local fiscal recovery funds, social services block grant, and medical assistance. So we had some significant programs that we did look at and do the testing for. In Wisconsin, once you have a federal single audit, you have to have a state single audit, especially if you, as long as you spend over $250,000 of state funds, which you do. For that testing, we did end up with 1 finding. It's more of a finding that just there wasn't another check or review by somebody other than the preparer. So nothing majorly earth shattering, but just something we needed to point out. And I'll go into that in a little bit more depth in a few minutes. So on the state side, as you can see, we tested a number of programs. Some of them are new because you had the county forest project loan and the stewardship grant that came through. Some are programs in human services we've tested for years, but every year those programs do change based on what type of funding the county receives every year and just how much of the federal government and state government makes us test a percentage minimum of your total expenditures for federal and state grants every year. So that's how we come up with the list of programs that we're going to test. So overall, we ended up with 3 findings. 2 of them are the usual ones we've talked about before. One is preparation of financial report. As we've talked about, for cost benefit purposes, the county contracts with us to prepare the financial statements. And it's not necessarily anything unusual. We see it with most of our clients, but it is still just something that we do have to point out. The second finding has to do with adjustments to the county's financial records. Every year we step back after we finish the audit, and we look at the number, the quantity, or the dollar amount, and just the type of audit entries we make to determine if we think that there was anything material in there that we made changes for. And this year there were a few items. And Kyle and I have discussed them, and we've shared different worksheets that, to then potentially go through to address not having this finding in the going forward. But again, we did make some entries that were significant. So if compared to what you would have seen for your preliminary December information that you had received. And then the third finding had to do with that federal state program. So when we look at your state grants, federal grants, we always like to see, a preparer and then somebody that reviews what that person did, just because it's easy to catch errors that way. I mean, we're all human. We've all typed a 6 instead of a 9, or added an extra 0 when we didn't want to, or forgot a 0 when we didn't want to either. So having that extra layer of review besides somebody that just is the one that prepared it is always a good internal control process to have. So our recommendation was, when we were looking at those forest project loans and project grants in the forestry department, when they were doing these forest grants, those reports got submitted, but nobody else reviewed them before they got submitted. We didn't find any clerical errors, but just the nature of what it should be is that you do want to have, again, another layer of eyes looking at something before it gets submitted to the state, just to potentially catch errors. That way you don't have to fix something after the fact. Any questions with those findings? If not, are there any other questions that I can go over or any other things you want to talk about from the audit perspective?
Supervisor Gerbarski.
Thank you, Mr. Chairman. Amber, we talked about fund balance before and you mentioned it, but I didn't write it down. Minimum percentage that should be in there versus maximum percentage.
Like from an industry perspective, we always like to look at 15 to 25% of your budgeted expenditures or actual expenditures. Here is the county's policy itself. The county itself has set something at 15 to 20% of expenditures in the general fund. So you're meeting those requirements as you've set them out there. But again, as from an industry perspective, we always like to see 15 to 25%. I will say there's some that keep it closer to 10 just because they feel they can cash flow. Fine with that. Some keep it closer to 30%. It all depends on each county's situation, on what activities they have going on and what their future is looking like.
Okay, thank you.
Yeah, Finance Director.
Yep, Mr. Chair. So yeah, while our policy does state 15 to 20%, we try to shoot for about 30% of expenditures for our unassigned fund balance.
Yeah, and I know at the counties association during the conference, they talked about fund balances and they were saying, yeah, 30%. I mean, and you might not realize it, but when all of a sudden something happens in the economy and you're not collecting taxes, if you don't have a cushion there, you could end up in a world of hurt, you know? So we're lucky enough to have a strong fund balance, so. It doesn't look like anything else here, Amber, so
Sounds good.
thank you for your explanation and answering the questions, so,
Sounds good. You guys have a good
Alright.
rest of the day.
okay. Okay, next we have the 2026 budget. So, Finance Director, are you gonna? Okay.
Okay, so first we're just going to start off with a statement that the budget is balanced, and then just some general housekeeping. If you could please make notes of your questions and we'll field questions at the end of the presentation. If you need me to go back to a particular slide to help with your questions, I'll gladly do so. So first we're going to look at what the budget timeline looks like for the budget. In June, under the guidance of the county administrator, the budget direction is set. Typically, this is directing departments to maintain their levy ask at no increase and to set what cost of living adjustment will be. This year, the cost of living adjustment is 2.4% to align with the April Midwest Consumer Price Index. Retirement rates are set by the state and insurance rates are set by our insurance provider. The overall budget assumptions will be discussed later in the presentation. Department heads are also given budget instructions, packets, and supplemental documents to assist in developing their budgets. During July and August, departments are asked to complete their requests, and this is just putting in their asks for their budget. After department heads have their numbers ready to be reviewed, the departmental asks are reviewed by the respective committees. In September, we hold meetings with each department head, the county administrator, finance director, and human resources manager. These meetings are to evaluate the departmental asks for their budget and to determine a methodology for budgeting expenses and revenues. We'll typically look at using a 5-year historical average of actual expenses and revenues. By October, it brings us to where we are now. We're giving a budget presentation to highlight the major changes in the 2026 budget. First, the presentation is given to the Administrative and Finance Committee right here, and then to the County Board. At the November County Board meeting, we then adopt the budget. Along with budget adoption, we also have to complete apportionment worksheets. Apportionment worksheets allocate levy across all municipalities based on their respective share of equalized value. The apportionment worksheets are due November 15th every year. So typically the county board meeting is held on the third Tuesday of every month. However, due to the requirements of filing the apportionment worksheets and the county board rules regarding the annual meeting, we end up having the November board meeting a week early to allow for timely filing of the apportionment worksheets. This year, the county board meeting to adopt the budget will be held Tuesday, November 11th at 6 p.m. So the county tax levy, excluding adjustments for library, local road and bridge aid, and debt service levy, is $19,999,566, which is an increase close to $590,000 driven by net new construction. Library tax levy is $561,924, which is a decrease of $1,526, and this is mainly due to a change in staff benefit elections. So as we have a county library, municipalities with their own public libraries are exempt from the library's portion of tax levy, and those municipalities are the town of Rome and the city of Wisconsin Dells. The library levy is exempt from the levy limit laws. The local road and bridge aid levy is $172,578, which is a decrease of just under $228,000. This levy is derived from the petitions received from towns for the construction or repair of bridges and culverts. Sometimes the projects come in under what the town petitioned the county for. In those cases, the fund balance is applied for future petitions. In other instances, the towns do not complete the project in the anticipated year, and then the fund balance is applied forward. The county will have 3 petitions. I believe they are coming before the Highway Committee and this month, and then the county board. So the town of Quincy for $19,993.30, and 2 from the town of Preston for a total of $155,529. So if you recall, last year this levy was for 4 petitions. There are 2 towns that had not started their projects yet, so the fund balance is being applied to fund those projects in 2026, which is why there is a net effect on the levy of roughly $172,000. The cities of Wisconsin Dells and Adams and the Village of Friendship are exempt from the local road and bridge aid levy. The local road and bridge aid levy is also exempt from levy limit laws. Debt service is levied to match our principal and interest payments in 2026. This levy is also exempt from levy limit laws. So this equates to a countywide mill rate of $3.88 per $1,000 in valuation, which is a decrease of around 73 cents per $1,000 of valuation. The mill rate will fluctuate based on the municipality. So what the mill rate means is that for every $1,000 of valuation, the county receives $3.88. Someone with a $100,000 home will have a county tax portion of about $388. So remember, those are the county taxes only. There's other taxing entities on a tax bill, such as the local school district, technical college, lake districts, and the town, village, or city. So we'll be covering the historical mill rates later on. The county's net new construction was 2.941%. Oh, didn't go ahead. There we go. So the net new construction was 2.941%. The net new construction is essentially how many structures were put on property to add value. This is a number provided by the State Department of Revenue, and this number is important as it's how much we're legally allowed to levy in the future year. As stated earlier, there are items that are exempt from the amount we can levy, which would be the library levy, debt service levy, and the local road and bridge aid levy. While there may be a dollar amount increase in tax levy, that does not mean that the mill rate will increase. The mill rate's actually decreasing by about 73 cents. So to put this in perspective, the mill rate was at its highest in the 2013 tax year at $7.66. The mill rate's going to continue to decrease while the dollar amount of levy increases due to the large growth of equalized value. So long as there's positive growth, the mill rate will continue to decrease. So the county's total levy will be $21,138,418, an increase of $355,839. So this is actually the lowest dollar increase in the last 4 years. And this is the detail from the state for the net new construction in all municipalities in the county. So you can see the net new construction was rounded to 2.94%. and this is the average across all municipalities. The towns of Colburn, Del Prairie, Newchester, and Rome are the only municipalities to exceed the county-wide average. I'm just pausing for some people to take notes. Good. All right, so this first graph here shows the equalized value going back to 2008. So you can see the value plateaued between 2008 and 2009 and then had a steady decline up until 2013. As I mentioned before, 2013 was our highest mill rate year. So from there, you can see a steady incline up until 2022 and 2023, where we had a rather large increase. Oh, this thing right here. Where do I put it? Over here? Right. Okay. There we go. All right. So this next graph shows the mill rate. So the mill rate is essentially the inverse of the equalized value. So you can see where the equalized value had its valley in 2013. The mill rate had its peak right here. The mill rate has been steadily declining since 2013, and its largest decrease being for the 2023 tax bills payable in 2024. And then this last graph shows the amount levied for the 2026 budget. While there is an increase in levy, there isn't as sharp of fluctuations like you see in the prior graphs. From 2024 to 2025, you see a rather large increase. This increase was mainly due to the $400,000 levy for local road and bridge aid in the 2025 budget. The burden for the tax levy increase shifts to properties that made improvements in the year, which then increases their property value. Okay, and this is a chart here showing the top 3 departments dependent on the tax levy over the last 6 years. The Sheriff's Department is the blue line on the top and has continued to increase year over year. Even with the additional funding from the state for county and municipal aid in 2024 of close to $400,000, the sheriff's levy has increased just over $1.3 million during this time frame. The Highway Department is the green line down here. This department has remained relatively flat with minimal changes in their levy. And Health and Human Services is the orange line. They've had a steady increase from 21 to 26 of close to $1.5 million with the intent to build up their reserves. Their reserves have now reached a point where they can use those reserves for capital projects not identified within the maintenance budget, such as the roof at Practical Sense. In 2026 budgets, they're increasing by roughly $230,000, primarily due to wages and benefits. All right, so what's in the budget? The salary schedule has been aged by 2.4%. This means that all of the wages from the schedule will be increased by 2.4%. The adjustment is in line with the Midwest Consumer Price Index measurement month of April 2025. The Wisconsin retirement rates increased by 0.25% to 7.2% for general county employees and elected officials. And the rates decreased by 0.25% to 14.7% for protective employees. And you can see the rates shown here directly from the WRS website. The top one here is the general county employees, and then the bottom one is the protective. All right, health insurance increase is 9.5%. The impact for an employee on the family plan is roughly $378 per year. And sorry, lost my place here. So and then for an employee on the single plan, the increase is roughly $143 per year. We have a planned reduction of the general fund unassigned fund balance in the budget. The general fund unassigned fund balance is approximately $8.7 million as of 12/31/24. The Governmental Financial Officers Association recommends an unassigned fund balance of approximately 2 months of expenditures, or around 16%. I know we kind of touched on it with the audit presentation just now. But our fiscal policy states an unassigned fund balance of 15 to 20%, or around $3 to $4 million is the minimum required. We're looking to get the unassigned fund balance to around 30%, or about $5.8 million. So the capital projects are funded with excess reserves in the general fund and the debt service fund. All right, fund balance. So this first graph here shows the general fund expenditures from 2013 to 2024. General fund expenditures are what we use as a measurement against our fund balance. This graph shows the general fund unassigned fund balance over time. So the horizontal axis is for the year ending. Below the blue line represents the dollar amount compared to the red area of total general fund expenditures. For the year ending 2024, you can see there's approximately $8.7 million in unassigned fund balance. And this increase was primarily attributed to favorable interest income and staffing vacancies. From 2018 to 2019, you can see there was a rather large decrease in the unassigned fund balance, and this is due to a transfer to the building project fund in the amount of $5.4 million. And looking at the general fund expenditures, you can see there's a fairly significant decrease from 17 to 18. In 2018, that was when we created the capital project funds and shifted those general fund expenditures to the capital funds. And now we'll move on to the percentages of the unassigned fund balances. So you can see again the sharp decline from 2018 to 2019 due to the transfer to the building fund. The fund balance has been climbing steadily since 2019. The minimum required fund balance was, per our policy, 18% in 2013 and 2014, and then 15% thereafter. So this budget will be spending down the unassigned fund balance by making transfers to various capital project funds in the amount of roughly $2 million. This should bring the fund balance to around 30% of general fund expenditures if all else remains constant. Now we're going to overlay what our policy requirement is, and you can see the red shaded area is what our policy requirement is. All right, so in 2025, Adams County had budgeted $24,148,799.75 in wages and benefits. In the 2026 budget, we have $24,832,919.27 in wages and benefits. So this is an increase of roughly $684,000. So first, we're going to cover the major changes within the general fund departments. The sheriff's office budget in 2025 was roughly $6.8 million in wages and benefits. In 2026, their budgeted wages and benefits has increased to roughly $7 million. This is an increase of close to $200,000. The Health and Human Services Fund budgeted roughly $7 million in wages and benefits in 2025. And the 2026 budget is roughly $7.3 million, or an increase of close to $317,000. Roughly $93,000 of this increase is for budgeting a case manager position at Practical Sense. We're going to, during the county board presentation, when we get to these parts about adding positions, we're going to have the department heads present to the county board and justify their positions that we have in the budget. So between Health and Human Services and the Sheriff's Office, the total increase is roughly $517,000, which represents roughly 75% of the wage and benefit increase. There were other departments that saw an increase in wages and benefits and those that saw decreases in wages and benefits. Most of the decreases come from filling positions that were vacant. We budget for family health insurance for vacant positions, and onboarded employees don't always take the family health insurance. The planning and zoning department saw an increase as we're budgeting a code enforcement officer position from part-time to full-time. However, this position does need to be completely justified before it moves to full-time. So in 2025, the wages and benefits for planning and zoning were roughly $489,000. And in 2026, the wages and benefits are roughly $564,000. So roughly $75,000 increase. The proposed changes return planning and zoning to close to the same budgeted wages as 2024. The Treasurer's Department saw a decrease as we're budgeting for 2 deputies in 2025. However, action was taken by the county board to reduce the office down to 1 deputy. In 2025, the wages and benefits were roughly $263,000, and in 2026, the wages and benefits are roughly $161,000. So about a $102,000 decrease. Next, we're going to cover the capital projects by department. We're just going to go over the major planned projects for 2026. For any planned projects beyond 2026, just refer to the capital project worksheets that will be located towards the back of the budget book when available. They are also attached to this agenda for admin and finance, and we're going to go over those a little bit later. So the capital items, those are larger costs that fall outside the normal maintenance of facilities and grounds. The total spend across the county is roughly $5 million. The highway department does have a different method for capital budgeting, so it will not show on the countywide summary. This list that I'm showing here is not all inclusive, but it highlights some of the major planned projects. So within the medical examiner department, we plan to replace the department's van. For the county clerk's department, we plan to provide a one-time infusion of $250,000 toward the eventual replacement of the voting machines used by the towns. For the maintenance department, we plan to replace the parking lot on the northeast corner of Adams and 3rd Streets. This is being bid through the building project, but will be paid for by the maintenance department's capital budget, as it was not originally identified in the building project. The sheriff's department will be replacing 10 defibrillators, replacing 34 tasers, and replacing the recreational officer truck and patrol vehicles. Emergency management will be replacing mobile radios and continuing with radio channel upgrades. IT department will be replacing a server. The airport will begin the phases of reconstructing the taxiway and taxi lanes. That project, I just want to touch on it. It was budgeted in 2025, but due to questions related to funding from the Bureau of Aeronautics, it's been delayed. So we're putting it in the 2026 budget as well. Hopefully it gets done this year, but if it does not, worst case scenario, we have it budgeted for 2026. Health and Human Services will be repairing or replacing the roof at Practical Sense. Parks Department will be purchasing a mower, replacing both Bobcats and a tool cat that's on their normal annual replacement. We trade those vehicles, or we trade that equipment in every year. Replacing a UTV, a leaf vacuum, and a truck, and constructing the shop building at Castle Rock. The Parks Department receives their funding for capital projects from their excess operating income over expenses and from the debt service fund balance. We don't budget sales tax specifically for the parks capital. Land and Water will have major repairs done on the Cottonville Dam. Solid Waste will be replacing a cable truck and a loader. They'll also be making some improvements to the small vehicle area near the scale. And they're planning to complete the vertical expansion hopefully in 2026 and install an additional gas system in the landfill. Highway will be reconstructing a section of County Highway Z from Duck Creek Bridge to Evergreen Ave, reconditioning County Highway D from State Highway 13 to 10th Ave, and they'll be seal coating nearly 11 miles of County Highway O. And the building project will focus on opening up entrance D and making major parking lot improvements. All right, we're going to summarize some of the how the budget is meeting some of the strategic goals of the county. Attracting talent is the first category. This budget will accomplish this goal through increasing wages with the Midwest Consumer Price Index. Improve roads. This is done through the highway projects that are planned next year. Budget and fiscal stewardship. So we have a balanced budget and healthy fund balances that are being used for capital projects rather than issuing debt. Additionally, we're seeing the lowest dollar increase in the tax levy in around 4 years. Natural resources. By repairing the Cottonville Dam, we're maintaining our current natural resources. Safeguarding assets and community, these are both grouped together due to the building project. So through the building project, we'll be improving access to the public while continuing to safeguard assets by having secure areas of the facility. All right, I'm going to go through some more graphs and charts. This first chart is showing where all of the revenue sources are coming from that are in the countywide 2026 budget. This is all of the different funds. So the general fund, highway, health and human services, solid waste, et cetera. So you can see the property tax levy accounts for the greatest share of funding sources at just over 31% of total revenues. The next highest revenue source is the category of interdepartmental revenues, or I'm sorry, intergovernmental revenues right here. At just under 16%. This is our anticipated grant revenues for 2026. And this is followed by fund balance applied, about 14.5%. Fund balance applied is a planned spend down of fund balance for capital projects. Next is public charges for services, around 14%. These are fees charged to the public for services rendered by the county. And then this is followed by intergovernmental charges, which are charges to other governments for items like road plowing and garbage collection at just under 13%. So similar to the previous chart, this one is showing the expenditure categories. The largest spending category is in public works at roughly 25% of the total expenditures. And this is due to mainly the larger budget with highway and solid waste. The solid waste department falls into this category along with some other smaller spending categories such as the airport. The next largest category is health and human services at roughly 21%. This category is not only the health and human services department, but also includes the veteran services department. Capital outlays are around 15%. The capital budget worksheets provide the detail for this expenditure category. And then public safety is around 13%. And general government is around 11%. These areas receive very little outside funding and are very dependent on tax levy. Later on, we'll be showing each department's levy dependency. And then this bar graph is showing a comparison of 2025's countywide budgeted revenues versus 2026. So on the far left side of the graph is the dollar amount, and the bottom shows what category each bar represents. So you can see the most revenue categories are relatively level aside from fund balance applied. This revenue source is just a spend down of fund balance on capital items, which you'll see on the next graph. So this bar graph shows the comparison of countywide expenditures from 2025 to 2026. So you can see a large decrease in public works. This is mainly due to the highway projects from 2025 being deferred to 26 and 27. And you'll see an increase in capital outlays, which correspond to the increase in fund balance on the previous graph. All right, and then circling back to the overall property tax levy, if you recall, the property tax levy was roughly 31% of total revenues, and of the total property tax levy, around 61% is in the general fund, followed by around 17% with the Health and Human Services Department and around 16% with the Highway Department. So as the general fund is the largest category for property tax distribution, we further break down which departments in the general fund the levy is used for. So you can see a majority of the tax levy in the general fund goes to the Sheriff's Department. Not all of these slices are labeled with percentages and amounts on here, but just kind of a general overview of where all the tax levy is going in the general fund. And that's it. So budget books will be electronically distributed by November 5th. And if you have any questions, you can contact myself or the county administrator. Are there any other?
Supervisor Kubarski, all your questions now?
I don't think I'll be the only one. By township, the building, Rome went up, I don't know how much that was, I can't remember. But Colburn, where'd the building increase come from there? Does anybody know? It was 8%.
Was one of my questions.
Darn it. And Newchester's 5%, and I think Newchester probably's got a lot to do with the dairy. Don't know that. But going back, let's try Colburn first.
Have Heartland Farms had any construction out there or not?
Say that
Is there-
again, John?
Heartland Farms is in town of Colburn, aren't they?
I would think so.
Yeah.
They built more additions probably. Okay. That would explain it. Okay. We got that one taken care of.
I mean, my question on equalized values was, do you know how we compare to other counties in the state? The 3% roughly?
Mr. Chair?
Yes.
Yeah, I believe, I looked at it briefly. I believe we were second highest in the state.
Okay. Per percentage anyways. Yeah.
All right. Budget lowered 2.4.
And when we're talking about equalized value, then equalized value, even though Rome is high, that does not include any of the new growth in the TIF district, right? Yeah. Incremented, right, it's not in there, right? Not until that's paid off.
mhm.
How many years is that on for?
Mr. Chair?
It used to be 20, but
Go ahead.
Go ahead.
Yeah, I believe the TID is scheduled till 2028.
oh. Believe not far.
Do you want to tell them more
Uh,
about what that would probably look like for us when it matures?
Um,
Roughly? Never mind.
I'm-
It's a good number.
Okay. So the levies. That one got
Supervisor
explained.
Pease, why Supervisor Gabarski?
Go ahead.
If we're gonna talk about equalized value, as much as the county likes it, it really hurts the local school district.
Hmm.
Because the higher this number, way the puts in the formula, the less we get in state aid. So this is a hard number for the district, the school district, actually.
You wanna go?
Supervisor Edwards.
Okay, Finance Director Kyle. You said that, the insurance for employees is expected to go up, what, 9.5%? Is that a guarantee?
Yes. That's what we got quoted from our health insurance company.
Okay, well, the main reason I'm asking is because of what's going on federally.
Mhm.
That if all of a sudden they start raising insurance rates.
Mr. Chair. So I'll just continue with that. The county lucked out. We've got, wouldn't you agree, Kyle, that
Mhm.
when we locked in that rate at 9.5, shortly after our run, it's called a run rate. So these are people who are going to the doctor a lot here, and that tends to, it's called a run rate. So if the run rate's bad, our premiums go up. We just got it locked in at 9.5. And a month later, where the run rate is exorbitant, it's way up there. So we could have been looking at double digits. We're gonna have to plan for next year because these things that are on there are things that probably continue. So it's gonna drive our premiums, and other counties didn't luck out, it didn't fare as we did. They're in double digits with the premiums, and so with our balanced budget, we would have had to go find it somewhere in our operating.
Okay, because
Yeah.
some of the other counties are cutting staff and cutting wages.
Yeah. And I sit on a group health trust board and I mean, the cost of inflation for healthcare alone this year was 8.5%. So that's what's really, the run rate might do a little bit, but really it's the cost of inflation on medical costs that's really causing the drive in a lot of the costs going up. So
On that same insurance note, I had a note down here. What percent of our insurance does employees take as a family and what percent as single? Do we know roughly?
Mr. Chair,
HR director.
I don't actually have a percentage. I did reconcile the health insurance invoice just this last month, and I want to say there were, oh, don't quote me with these numbers, but it was 90 something that had family, actual policies, not 90%. and 70 some were at the single plan. So of the roughly maybe potentially 250 employees, all those are not full-time. Those are the amount of individuals that take the policies, the health insurance. So I don't have a percentage for you without calculating the full-time employees themselves. But we roughly have 90 something taking the family plan and 70 something taking the single plan.
So the majority is family, I take it. And then, well, there's some that probably don't take it. Their spouse probably has it on something else. Okay. All right. You got some, go ahead.
Supervisor Pease,
Thank you,
and then
Mr. Chair.
Supervisor Paler.
Thank you, Mr. Chair. I have a couple of questions. First of all, about the health insurance, I did a quick little math here. If you were making $50,000, you're getting about a $20 a year raise. If you make $50,000 and you're taking a family plan, you're losing money in the next year's paychecks because of only 2.4% raise. So that's something when we talk about trying to retain staff, that's a tough, that's what you're saying, you're shaking your head and you're wrong.
Mr. Chair, I just
Yes.
want to clarify that a little bit because we just want to make sure everybody
Yeah.
understands. I would like to turn that over to Carol if she wants to comment.
Mr. Chair?
Yes,
So with our wage study at the beginning of the year, individuals will also have a step increase.
Okay.
And within that step increase is that 2.4% as well, because we aged the scale. So it's just not a straight 2.4% increase for the employees. There is also a step increase as well. That's approximately 2% as well.
Okay, so they will be seeing something in their paychecks.
I
No.
hope so, yeah.
Okay. I want to make sure of that it's tough when you look at that increase. So, second of all is, why are we spending $250,000 for voting machines? It seems like we just, had a whole bunch of new ones.
Mr. Chair.
Yeah.
Yeah, so we're doing a one-time infusion of the $250,000. We're starting to set aside money for the voting machines. I don't know when they're planned to be replaced at this point. They have about a 10-year life. So we're setting money aside for the voting machines to replace them.
Didn't the state help us pay for the other one, so? Okay, oh, we used the ARPA funds for that, okay. IT, I remember going through that. How much is that server? Is that gonna be like $1 million or what is that? I don't know, I went through the capital list.
IT director's back there. He's looking to turn his mic on, so Kyle, you don't have to answer.
I believe we budgeted for $200,000 for the replacement. It is not just a single server, it is the main servers that all of the servers are housed on in storage.
Mr. Chair,
Yes,
250,000.
Over how many years? I can't read that, it's pretty small.
That's a 5-year replacement cycle, Mr. Chair.
Oh, yeah, that's why it was $1 million, right? Over
Yeah.
5 years,
Correct.
okay.
Sorry.
Next question is, in the parks, we replace bobcats every year?
Mr. Chair.
yes.
Yep, that's correct. So every year they trade them in. I believe it's about $4,500 is what our cost is for those bobcats. When we trade them in, get a brand new model every single year. And it's only $4,500 cost to the county per piece of equipment.
Mr. Chair,
Yes,
so I see some faces. So it's a lease. It's a lease, it's a form of a lease, right, Kyle?
No,
Or something? But there was a study done that we did that we actually came out ahead by doing this. Do you want to maybe explain on that if you can remember?
Oof. Yeah, Mr. Chair.
yes.
Yeah, it was quite a few years ago. It was, I think we've been doing this for maybe 3 or 4 years with those bobcats. Rather than owning them for 10 years, due to the limited use that we have on them, well, I shouldn't say limited use. They do use them quite a bit. They put a number of hours on them through the year, but it was more beneficial for the parks to replace them every year. They just trade them in and they get a brand new one every single year. So that way they don't have to do any maintenance on them. They don't have to replace the tires or anything like that on them. So. Believe there is. I believe there's three pieces of equipment.
I remember it was two last year because I asked a question about it last year. It was two. My last question would be, Preston's culverts or whatever. I thought we approved three of those last year, or did some of them are now, like you said, are moving forward into this year, or what's the 155 for?
Mr. Chair,
Yes.
the ones that we approved last year, if I recall correctly, were Town of Rome, Town of Easton. Shoot. And I don't believe Preston was one of them that we approved last year. The ones for Preston are going to come before the board or before Highway Committee and then before the board this month.
Well, I think we approved three of them, I thought, for Preston last.
Oh, see if we can find it.
I could be wrong, obviously.
And I'll just pull it up on my drive.
Mr. Chair?
Yes.
While we have some dead space, I want to kind of go back to the voting machines, like why are we buying all the voting machines for all the municipalities might be a question. And the reason is because we want a standardization of all voting equipment, which makes our clerk's office have a more efficient operations. If you've noticed over the past, I think a couple times now, the efficiency of it, you know, the results are very quick. And municipalities don't have a lot of money. So I think the county's in a position that we can afford to buy the equipment every 10 years. However, the municipalities are responsible for the maintenance of it, so the licensing and such.
Oh, I think it's a good idea. I just wondered
Okay.
why we're doing it so fast, but this makes sense to do it over 10 years.
Yeah, we had to catch up to be where we should be at this point in time for a replacement to be on that cycle.
Mr. Chair.
Yes.
Yep, I got the petitions that we budgeted for in 25. We had Big Flats, Quincy, Easton, and Rome.
Okay, thank you.
Supervisor Baylor.
Just a couple of comments. First off, on the bridge thing. I think Easton failed to do that bridge, didn't they?
Mr. Chair.
Yes.
I believe that's correct. Town of Easton was one of the towns that has not proceeded with the project, so we're budgeting the fund balance. We're not levying in more taxes. We already levied taxes for that project, so we're budgeting the fund balance for them for 2026.
Evergreen is closed right now. I thought they were doing that right now.
There's something that stopped that on Evergreen. It's not moving forward this year anymore.
Okay,
think it was-
so I know you can't drive down that road.
Utility.
And the other one
Yeah.
was kind of for Cynthia and Lyanna. I believe with them voting machines, didn't the towns have to put up part of that money on the last round? No?
Mr. Chair?
Yes.
No, they did not. We used ARPA funds. Yes. And they do pay the maintenance. And they pay for the batteries.
One more question, Mr. Chair.
Supervisor Peace.
How you said that it's only going up. The percentages, the overall budget's only going up a very little, couple 100,000, if I'm not mistaken. Could you tell me what that percentage is? Is it 1% or less than 1%? I would love to tell the village when I go to their meeting what our budget actually is going up at. It'd be great to tell them 73% mill rate down, but then the overall percentage when our budget went up.
Trying to calculate it right now.
That's fine.
Mr. Chair.
Supervisor Kubarski?
Something that came up in the last building and rec meeting. Practical Sense roof was leaking and now it's gonna get fixed. The question was, who owns that? Does the county own the building?
Mhm.
Okay, that's all I needed to know.
Mr. Chair.
Yes.
It's roughly it's under 2% is what the increase is.
Okay. Seeing no further questions, we'll move on to vehicle disposition outcomes. Assume the finance director is going to handle this.
Mr. Chair.
Yes.
So a couple months ago, I sent a memo to the Administrative and Finance Committee, kind of outlining what was going on with the vehicles and some of the problems that we were facing. One of the major factors is the discounts that we're receiving on the vehicles are not as great as they used to be. And then another factor is with Wisconsin surplus, their fees that they charge people for making purchases through their auction site have also slightly increased. So there's a couple factors there with those fleet vehicles. Now, just to give some history, the reason that we had pursued doing this was we were approached by Enterprise in 2021, 2022, somewhere around there, wanting us to lease vehicles from them. And we would get a new vehicle every 2 years. They would turn around, they would sell the vehicle. So we were about to go forward with that, with leasing vehicles from Enterprise. But then we thought to ourselves, well, if Enterprise is making money off of buying cars and then turning around and selling them after they're only used for a couple of years, why can't the county do it, especially with the government discounts that we get? So that was a program that we were trying to implement. I believe down at the bottom of the page, Lana, if you could scroll all the way down to the bottom. I've got a schedule attached on here. It's long. Most of all of that was the same as before. So we were trying to implement this program and turn around and sell the vehicles every 2 years. At first, we were seeing some success. We did sell a truck for more than what we had purchased it for. Some of the vehicles we sold just a little under what we purchased them for. But as of recently, sorry, I'm trying to get on the internet too right now.
Not working very well.
No. If you could scroll up a little bit, Lyanna. So I just kind of have a follow-up statement listed on here. So after that initial memo was issued on June 30th, 2025, we had the sale of 3 more vehicles. The following vehicles have been sold since that initial memo. So we sold a 2019 Equinox and 2 2024 Equinoxes. Those 3 vehicles were purchased for roughly $77,000 and sold for about $44,000. The 2019, that one was in service for 6 years, and the 2024s were in service for 2 years. And then I have that schedule attached below that shows the vehicles sold since 2023 when we began to implement this program. So you notice the more successful sales were pickup trucks, while the least successful sales were the most recently disposed of Equinoxes. The other successful sales were vehicles purchased in 2020, and that was when we were receiving a larger government discount. So what we're recommending is that the county replace vehicles every 5 years. We're just going to go back to every 5-year vehicle replacement cycle, or 75,000 miles. The whole purpose that we had for the fleet vehicles was to reduce mileage expenditure, which we've accomplished that, and it's cheaper to own vehicles, have employees use those vehicles rather than it is to reimburse on mileage. For example, Health and Human Services, I believe, was at some point 75,000 a year in mileage expenditures, and now they're very minimal in their mileage expenditures. So that is what we're recommending is just to go to every 5 years, and that's how we have it reflected in the capital budget.
And that doesn't include the sheriff's, the
Um,
deputies' vehicles,
no.
right? They're
No,
every-
just the fleet
right,
vehicles.
okay. So-
But I believe they are every 5 years anyways.
Supervisor Paler?
Would I be correct in assuming that Enterprise does not offer that same program?
Mr. Chair,
Yes.
if you attended the WCA conference, Enterprise had a booth. And I just right past because there's a couple of municipalities that actually did the Enterprise lease program and are wishing that they didn't. And they're trying to figure out a way to get out of it because now the dollars are up here. Because you have to remember, they're not getting that benefit either. You know, they were assuming that the government discount was so much that by the time they sell it, they were still going to come out ahead. It's not the case anymore because we don't get that big government discount anymore. And plus that the auction sites are charging a lot more. And I did check with a couple of other auction places. They had booths set up and they're actually higher than the one that we're using, which is high to begin with. So it's just the costs are just crazy. So anyway, we're coming to you today to kind of come up with a methodology with the vehicles. I think a 5-year life cycle is good. That's typically what it is on a depreciation schedule anyway. And then the 75,000 miles, we feel like we'll be under a threshold that it's still an attractive vehicle to sell. And this is just a standard. So when we meet with the department heads, they may have a particular vehicle that's just top notch, no problems, no maintenance expense. We might take that vehicle and extend it 1 more year, but that'll be a discussion with the department head. We just need a standard to kind of go by. We're running it by you. This one requires direction on this.
It's under presentation.
That's under presentation, so.
Mr. Chair.
Yes, Supervisor
Yeah.
Kubarski.
Yeah, I went over that list yesterday or whatever, and a lot of those vehicles are older and they're not gonna bring as much. And I think it alarmed me to see all the red, but then when you read through it, it's not that bad. And let's face it, owning vehicles, you don't make money owning vehicles very often. That's an expense. So I think hopefully this will work out, but I do worry about Health and Human Services and the kind of mileage that they get. And I don't think they put on many miles, but I don't know. I'm not on the committee, so.
Okay.
Mr. Chair,
Yes.
Kyle, do you want to maybe talk about how we would probably rotate vehicles watching the miles? We do have a fleet management program now.
Mr. Chair.
Yes.
So we have a fleet management program that tells us mileage in real time. So I could pull up a vehicle and tell you how many miles are on it. It'll probably be a slight variance based on when it gets updated, but we use that to kind of rotate vehicles around. So like with planning and zoning, they put on a lot of miles. I think when they were swapping vehicles every 5 years, they were over 100,000 miles by the time they got them replaced. So the plan is to use the fleet vehicles at the courthouse, rotate those with planning and zoning. And then Health and Human Services, they manage it through this program as well, but they try to assign vehicles with lower miles first. So that way they're spreading the miles around. Most of their vehicles are sitting around, I think, 30,000 miles roughly.
Okay, Supervisor Pease.
I actually like this plan. I think it gives people directive on what I look up there and there's mileage up there. There's only one that's two that are over that threshold and one that's close. So I think that this is a good plan going forward.
Okay. And we'll move on to next items, proposed budget 2026. First one is treasurer.
Mr. Chair.
Yeah,
So-
make those bigger because we can't pull them up on our system, so. Thank you.
So we're bringing the budgets back to the committees because we've met with the department heads to review their budgets. So the major change with the treasurer's budget is that we adjusted the interest and penalties and the managed forest law revenue to line up with current trends and averages. We removed interest income and moved that over to the finance department budget. And then we removed the requested position and adjusted health insurance benefits from a 9% increase to a 9.5%.
Okay, treasurer.
I have a question before we talk about the position. I'm curious, the reason for moving interest and revenue, the interest revenue from the treasurer's department. Did we have recommendation from our auditor to do that move, or what are we hoping to accomplish with that?
Mr. Chair?
Yes.
Yeah, so it was, we just moved it over to the finance department from the treasurer's office, just because it kind of better aligns with what's happening, like with the interest income and the duties revolving around that.
So it is a statutory duty for the treasurer to manage public funds or watch public funds. And, you know, I question, just, you know, with my business background, moving things around in a budget like this. And we have a tendency to do that, whether it's staff or income from one department to the other. It really makes it difficult to, you know, watch trends. So that change was not discussed with me at all. But I want to back up and talk about the staffing in the treasurer's department. So last year.
Mr. Chair, that change was discussed with her
No,
at the budget.
no, it wasn't. So.
Mr. Chair.
This
Chair.
Let the
Okay,
treasurer speak.
The discussion that we had in that meeting was whether or not we felt what was going to happen with interest levels, but moving it from the treasurer's office to the finance department was not something that was discussed or approved. But I wasn't asked my opinion. So, you know, and given that wasn't a public meeting, I don't know how, you know, we can really say specifically what was discussed, but it certainly wasn't a takeaway for me from that meeting. The staffing roles. So in the treasurer's office last year, the staffing in that office to budget was roughly $60,000 under budget in the treasurer's office. A majority of the savings comes from no use of healthcare, and then also, you know, running with one deputy short for a portion of the year. But what happens when you run short in staff? I mean, the work doesn't go away, right? So we have the responsibility for collecting property taxes, which is the largest funder of this government, and managing those accounts that are behind and making sure that they're staying on payment plans and that we are consistently following the laws. So what we've seen is the accounts that are currently behind in paying their property taxes for review in this following year, so 2026, worked 4 times that of what it was previous year. And as we continue to understaff the department and make managing those delinquent accounts difficult, we will continue to see that increase. Because when you do collections, if you're not consistently reaching out to those people to remind them of their agreement and make sure that they're staying on it, you're not going to get paid. So, and then you back up to the fact that of the properties we did take back last year, we have 3 that we had to give back to previous owners because of error. So, you know, by understaffing a department like this, we're not saving the tax payers, you know, any money when we have to go back and redo work and potentially open the county up for lawsuits. So, you know, my request again was to have a part-time staff member that could flex up during peak season. And, you know, once again, I do not feel that there's a true understanding of what happens in these front-facing taxpayer departments. But the difference I think that a lot of the community members see and have shared in concern is that they want to make sure that their tax dollars are being managed by someone who lives in the community. And an elected position like the treasurer is exactly that. So I would respectfully request that this committee and the county board at the next meeting staff the treasurer's department and use the $60,000 that we underspent last year and the $100,000 that we're on trend to underspend this year to fund that position as a part-time position who has Amy Skemp has no intention at this point to take any health benefits from the county. She works part-time and she currently has been filling that gap, and the salary's been paid out of my own salary to keep us within what is expected from the state.
Human resource.
Chair, just one comment I'd like to make because this is happening in my department. I don't have, neither one of us in my department take the health insurance. Now, next year, there's a change in a life circumstance where someone has to pick up the health insurance. So using that as a way to pay for a position, I don't think is a good route to go, because at any time with a qualifying event, that insurance can be picked up by that individual, whether you budget for it or not. So those funds may be being saved because they're not taking the insurance, but they can take that insurance at any time with a qualifying event or during open enrollment.
Yep, Mr. Chair, that's absolutely correct. However, we have already saved the funds that I'm requesting to be spent in the next budget cycle. We're currently under budget $100,000 in the treasurer's office. Last year, we were under $60,000. So I'm just asking to dip back into the funds that we have already taken from our taxpayers to operate the treasurer's department and use that to catch up the work that we are now behind because we understaffed that department. So this is not an additional ask. It's sitting in a fund right now. Where is it going to be used?
It'll go into the general fund and use in a capital project that we can't borrow money for. And, that's how the county operates with the general fund is, it doesn't seem like we can bond these days, so we might use it for a capital project or something like that. So some unforeseen circumstance that might come up. That's how things are decided. So, my viewpoint is that, the county board did vote on a resolution to hire 2 people in that department, have only 2 people in that department. And this budget reflects that. I know you're only not into it a full year yet, so we have to see how that goes and make a decision. But after that point, most of the delinquent taxes, I would assume, are similar to any other billing. Is that all the billings? If you have a delinquent billing, it's all computerized, so you probably just send out additional bills once they get delinquent so far. Then we turn them over to our foreclosure process if they're not paying. So working with the electric co-op, we didn't deal with people on a daily basis, making sure that they pay their bills. We just send them another bill with interest and penalties, and if they don't pick up, they have some kind of a penalty down the road. We have that here at the county. We foreclose on the property and can take that property back and sell it, and they get the funds from it if there's any remainder funds. So I don't know if there's any additional. I talked to the Calumet County Treasurer, who's on the county's association, and asked him about how much work is there in foreclosing. And if you use a title company, the title company does most of the work. We don't have to do a lot of research into that, and the title company does all that. So
yeah, Mr. Chair, I would welcome you to stop down in my office, and I will happily walk you through the errors that were found from what was run through the title company on the last time, and at Corp Council's pretty much been part of that. And I also shared with her Calumet County's steps for the foreclosure process, so she has that. But it doesn't take away our responsibility to actually look at why did that tax certificate come back? And was it an error that was made here? And just yesterday I went through 3 and I found one where the address was never changed. So they didn't receive their bill. They didn't receive their tax certificate. And there is also a chance that this portion of the property probably was part of a sale that was left off. But if you don't take the time to research those things, then you're taking back someone's property that doesn't even really own the property. And there's at least 2 that I found on the list this year just by paying Amy Skemp to do that research. So what I'm asking for is not outrageous. I've asked for a part-time position that can flex up during the tax collection season, which also is at the same time that I'm trying to do settlements, and using tax dollars that we have already taken from our taxpayers to fund that position. So that is my ask. And I appreciate that you may want to think about that between now and the county board, but I ask that if you have questions, you stop in the department. I will happily walk you through just the few errors that I've found just in the process that put us at risk. So.
Okay, Supervisor Pease.
Actually, I appreciate this because I supported having a new treasurer to get the full-time position last time. And she's now come back and asked for a half-time position. So I think that we can see that there's some work there, but there wasn't much work to do a full-time position. But I will look at this closely going forward and see where I believe this should go. Thanks.
Supervisor Kubarski.
Mr. Chair, the county board voted on this. It's been recommended to not fund the 3rd position. And it keeps coming up. And I think at some point, it's got to stop coming up. And I don't know if there's some laws that says that you can only bring it up once. I thought there was, but we continue on, and the county board voted on this. So it's a done deal.
Human Resource Director.
Mr. Chair, I just wanted to note as well, because I don't know if it's noticed on the budget and wasn't mentioned, but we did add some money to her budget for 2026 for on-call for those peak seasons where someone needs to come into the office as well. So that wasn't mentioned, so I want them to be aware that there was some on-call that was put into our budget that was not budgeted previously for 2026.
Okay, Supervisor Pease.
And that on-call money, is there a rate of pay per hour for that, or how do you spend that money?
Mr. Chair?
Yes.
So the way on-call positions work is, and this is any on-call position, they receive the higher rate of whatever position that on-call position is going to be, whether it be a clerk position, like a clerk typist, or, on our wage scale, the on-call gets paid that higher rate. And there's never any increases to steps or anything like that.
Okay, anything else on treasurer's budget? Okay, seeing none, we'll go down to IT.
Mr. Chair.
Yes, Finance Director.
Yep. So we had adjusted some of the primary changes we made with IT budget was adjusting the contracted services and the computer maintenance. And then we adjusted the health insurance from 9% increase to 9.5%.
Questions? Okay, seeing none, we'll move on to County Clerk, County Board.
Mr. Chair. With the county clerk budget, you're going to see initially we had put in a $500,000 fund balance applied for the election equipment because we weren't sure when they would need to get replaced. We reduced that down to $250,000. We were adjusted the clerk fees and then increased operating supplies for the elections for next year. So really, there's a number of elections next year, and then health insurance benefits changed from 9% to 9.5%. And then for the county board, we just adjusted the wages and benefits for county board per diem. We'd increased that a little bit.
Gabarski.
Yeah, I thought I saw something on there in the clerks. And it had to do with the influx of fund balance. I thought.
Yes, and that was for the voting machines.
Yeah, but it was more than that though. I mean, a lot more. Where the hell was it? Yeah. 000. That's 500. Okay, we talked about that.
That would reduce down to 250.
I don't see it now.
Right here.
Oh yeah, I got that one. That's not a problem, but I thought we had gone, well, maybe it's somewhere else. 500,000.
The bottom. Go all the way to the bottom.
There it is. And that's why. You got 14, 17, 13, and then 513. And I think that was it. That was the end. Okay. Sorry to bug you.
Okay. And nothing else on those. Corporation Council.
Mr. Chair.
It's easier to see this one up here than it is that one.
The primary change we made with Corporation Council is adjustment to outside legal services. Other than that, there was no other changes, I believe.
Supervisor Peace.
So that outside legal corporation number that's based on a rolling average of 4 or 5 years, or why did we reduce it that much?
Pulling up my notes here, sorry.
Trying to pull it up.
Yeah, I'm trying to pull
Internet's not
my
working.
notes.
That's all right, Kyle. Why don't you just email it to me once you get back to, that's fine.
Okay. Otherwise, finance.
Yeah. Oh, Mr. Chair.
Yes.
Back to Corporation Council. So on my notes, I have the 5-year average that we had for outside legal services was roughly $192,000. Current year is projected to be around $250,000. And then based on the based on what we're utilizing for outside legal services and cases going on, that's why we had budgeted what we did.
Okay, then the finance.
Okay. Mr. Chair.
Yes.
All right. So for this one, we had added the interest income into the finance budget. We added fund balance applied for fleet vehicles. We added a grant revenue for the transportation planning grant. So we had submitted an application for that grant. It's a planning grant for the countywide transportation. And then
So it's just to see where it's going to be, not moving forward with the transportation, right?
correct.
Just for the grant.
Yep, it's a study. Yep. And then adjusted insurance expense to projected amounts, and that's our insurance, like liability, property, that type of insurance. And then we adjusted to health insurance benefits from a 9% to 9.5%.
Okay. Any questions? Okay, human resources then?
Mr. Chair,
Yes.
primary changes that we made with human resources, we increased tuition assistance expense based on projections and then adjusted health insurance benefits from a 9% to 9.5%.
Yes, Supervisor Peace.
Ms. Wood brought up the fact that somebody may change their mind and want to pick up health insurance. How do we handle something like that when the budget's been approved? Do we try to forethink that, or how's that work?
Mr. Chair?
Yes.
So we were lucky enough that that was discussed, that we needed to put that in the budget. If we know that there's individuals that know next year that they're gonna be wanting to change the insurance because maybe they have it through their spouse and now they're gonna lose that coverage. You know, departments will bring that forward so that we kind of know that ahead of time. We can't control, you know, what happens next year. If somebody was not taking insurance and unexpectedly that does happen. And because we have to offer it to them. And then we also, any vacant position, we budget at a family plan, whether they take the family or they're single, just because we don't know. So there could potentially be some savings there where it could offset that.
Thank you.
Okay. And then administration?
Mr. Chair. So
Administrator.
the primary change on this was that the administrative assistant position was filled during the budget process, so we updated the wages and benefits on there to be reflective of what's projected.
Supervisor Peace.
There's a line on there for meals that it was like $100 and now it's at 5,000. What is that for?
Mr. Chair, what was that? I was coughing.
The
The-
meals,
Meals went from
Oh.
100 to 5,000.
they were like, I think they said 47.32 and now it's 5,000. So I just wonder, are we having a big banquet that I don't know about or what?
Mr. Chair, there could be planning the retreat is in there. So just need a cushion. Don't know about prices. We lucked out at 500 before.
Okay, thank you.
So maybe it may be in a better place than meals.
Yeah, it's not for me. Yeah.
It just looks really goofy.
Yeah.
I don't know. No.
Okay. County, we'll move on then, countywide capital budget.
Mr. Chair.
Yes. Finance Director.
Okay, so this is the total countywide capital budget. So this first page here is just the summary. I gotta turn around so I can see. So this first page here is the summary. The top section there is the total expenditures that we're projecting out for the next 5 years. Now, some of those projects may not happen in the next 5 years. They may get deferred. We may not do those projects in the next 5 years, but we have them in there as a plan for capital replacement. So you'll see it's broken up by type: equipment, fleet, parks, public facilities, road and bridge, technology. So in 2026, between all those categories, we're planning to spend just over $5 million on those types of projects. Throughout this 133-page document, you're going to see summary pages of everything, and I'll kind of go through an example of one of them. Then on the funding source section, you see what the funding sources are for all of those capital projects. So we have about $8 million in funding sources, but we're spending $5 million. That's because we are setting aside some additional funds for planned future projects. So we're setting aside more money than what we're actually spending. So you're gonna have a summary page like this for every single department, and this page is the county-wide summary. So, Lana, if you could scroll down to medical examiner summary, that'll be the first one I'll kind of go over. Okay. So medical examiner summary, you're gonna see in 26 plans to spend $55,000 for a vehicle. So that's the planned expenditure. And then you're gonna see it's nothing for the next 4 years after that, because there's no planned expenditures for the next 4 years. So this is just the summary page for the medical examiner. They have two capital assets, and it's the cot and the vehicle are their capital asset worksheets. So you can see general fund balance applied of $10,400 there. That's general fund balance that we are moving from the general fund over to the capital project fund for the medical examiner to fund their capital projects. Future years, you're going to see debt service fund balance applied. That's because it's unknown what the general fund balance, unassigned fund balance is going to be in future years. So we plan first to look for the general fund unassigned fund balance. Then if we don't have the money in the unassigned fund balance, then we look for the debt service fund balance. Then you're going to see the capital fund balance applied. That's us spending down the capital fund balance that has been transferred over to the medical examiner capital fund over the years to fund this capital project. So then, Lana, if you go to the next page, I believe this is the vehicle. Right there. Yeah, so this page then goes into the summary page for the medical examiner summary. Now, what we did this year, if you could scroll up just a little bit. Okay, right there. So you see the project number on there of 131-34001. The project code 131 is going to show up in the budget printouts, in the budget book. And it's going to track all of these by project. We just updated our chart of accounts to be able to better track how much money we're setting aside for all of these capital assets. So by using these project codes, we'll know how much money is set aside for all of the capital assets within the county-wide budget. So that's something new this year. Before, the project numbers were just there. I guess almost kind of for no purpose other than to have a number assigned to them. But now the number assigned is going to correlate to the printout that we get from Skyward for the budget book. So it's going to make a little more sense when you're looking at those summaries for the capital budgets. I guess if there's any questions on these capital budgets or the changes that we made this year.
Mr. Chair.
Yes, Supervisor Skabarski.
Kyle, regarding that purchase for medical examiner, do you have any idea? I see it's like a 5-year revolvement. How many miles does that thing get? I mean, it's got to be minimal. Maybe Rick could answer it better.
Hold on, Mr. Chair.
Yes.
I'm gonna check in our system here really quick and see.
It can help out a little bit. The biggest reason for the second vehicle is when somebody's out of the county, like taking somebody down for an autopsy, they want to leave the big van here to respond to other deaths within the county. So there was a problem that when they went down to autopsy, took the only vehicle out of town, there was no way to respond. So that's why they're asking for a second vehicle.
Has that answered your question? I mean, I don't know. Okay. Trying to move on, Kyle. Is there anything else on that?
No, that was mainly what I wanted to cover was the change that we were doing. And I just kind of wanted to give a brief summary of those capital budgets. And yeah, that change that we're making with the chart of accounts is going to help us better track what we have set aside for those assets. Because previously it was all just pooled into one fund and it was like we have $500,000, but what is that for? What assets are they for? So now we're gonna be able to better tell you how much we have set aside for a vehicle, how much we have set aside for a cot, and we're gonna be able to do that for every department's capital asset worksheets.
Okay. Supervisor Pease?
So county manager, this might be a question for you or Kyle. So going back to the trust fund, would that be a committed? Would they be committed funds then? Or that doesn't apply to this?
Mr. Chair?
Yeah.
Are you referring to the GASB 101 change?
No, they're signed, correct?
Oh, yeah,
They're signed.
they're signed. Yes.
Mr. Chair, do you need a
Yes.
motion to move this forward?
No,
Okay.
I don't believe so.
I did learn something at the conference.
But hopefully, as you look at the budget, you can we understand a little bit more how the capital budget items are and what we're looking at for the capital items, and that's what we were trying to get. And Kyle's gonna explain that at the county board meeting also. Aren't you?
Yeah.
For the capital
Yep.
budget, so,
Yeah, I can.
okay. Okay, next item then is tax delinquent real estate that's sold for under market value. Treasurer?
Yeah, Mr. Chair, so this property has been listed 3 times and finally received an offer. Each time we list it, we start at fair market value from the tax bill. If there's no bid to hit that minimum bid, then after 30 days, it'll be removed and then relisted at a 10% reduction, and that happens until someone bids at least the minimum bid. So in this case, the minimum bid was $10,526 under fair market value. It still leaves a profit on what they owe us that will go back to the original owner. The county was owed $2,964.44 in back taxes, $233.17 in fees, for a total of $3,197.61. So what we're just looking for is approval to move forward with the sale of this property. And, I guess I would question like going forward if we want to do this for every single property, because we have just under 400 properties next year that we're working on. So.
And the ordinance says says that it has to be approved by this committee,
Yeah, yep.
So-
If it's sold under fair market value, it has to be approved by the committee.
right? But if we have multiple ones, they can come all at one time and they can be handled in one motion. So do we have a motion to accept the bid? Supervisor P, second by Supervisor Paler. Discussion?
I actually have, okay. I have a question.
Supervisor Paler.
We still got the money that was owed to the county, right?
Yes, the buyer pays the fees to the online bidding auction, and the county is paid what is owed to us first, and then a second check is cut to the previous owner or their estate if they're not alive anymore.
Okay, the next question, maybe nobody here can even answer that, but the excess money that went back to the owner, are they responsible for any other liens against that property with that money, or are they getting that money free and clear?
Leads it clear, right?
No, well, it's free and clear because the NREM foreclosure process strips any other liens. So when we acquire title to it, any liens are taken off and then we sell it. And so the buyer may have some personal liability still. For example, if the buyer had a mortgage, the mortgage lien could have been discharged in the foreclosure process, but that doesn't mean the bank can't still collect from the buyer personally. But the lien itself would have gotten removed in the foreclosure process. And we actually have to, well, we actually have to give notice. So when Kara gets the title work back for the ones we're going to be foreclosing on this year, she has to send a notice to any lien holders so they're aware of the foreclosure process. And then often what will happen is they will pay the county the taxes so that they can acquire the property and foreclose on it themselves.
Okay, as long as the county got their share,
Okay.
is all that should really be concerned about. I move that we go
Yeah,
forward.
we
with
had
this.
the motion, you seconded.
Oh, I'm
it.
sorry.
Okay. Okay. All those in favor signify by saying aye.
Okay.
Those opposed signify by saying nay. Okay, motion is approved.
All right.
Sorry, did you have something else, Supervisor Gabarsky?
I did, and it didn't have to do with this particular property, but in our lawmakers' infinite wisdom. So we sell this property and go through some of the legal aspects, and then we keep what's sold to us. We just turned into a realtor.
Yeah.
And that's, I mean, that is, I don't know what the heck they were thinking, but I don't think they were using the whole brain.
Well, I think they were going by some court decision over in Minnesota.
For sure. Well, it was actually a United States Supreme case. It came from out of Minnesota. Minnesota used to do it the same way Wisconsin did, where the county got to keep the excess profits, and the United States Supreme Court ruled that that was an unconstitutional taking. And so that's why we had to change how we do it.
In the past, Nancy, for this law change, say we have property at the goal $3,000, we got $30,000. We kept that money.
Yep.
Were you responsible to give any of that to the banks for any form of mortgages?
Not for mortgages, but, well, when I do my corp counsel report, you'll see that there's a case with the name of Elliott. And that is a case against all 72 Wisconsin counties, the city of Milwaukee, and some other municipalities, claiming that we need to pay some of that money back to the property owners.
No. Okay. So we got the reports coming up. Any questions on the project status report? Any question on the treasurer's reports? Okay. IT report. Okay, human resources. County clerk. Okay, corporation counsel. You wanted to mention something about that LA case or?
Yeah, so our attorneys have filed a motion to dismiss because they believe that the statute of limitations has expired. And so we'll see what happens with that, but that's where it's at right now. That's, let's see. It's the one that says 25 CV 421 Elliott et al. And when I say our attorneys, Atoles is the lead attorney, but they're actually representing many of the counties, not just us.
Okay. Finance director and the ARPA report are there in the monthly report. So anything you have questions on? And county administrator.
Thank you, Mr. Chair. Good morning. I'm gonna start out with the accolades. Priscilla Ramos, Practical Sense Training Specialist, is being recognized for for her involvement in updating the Health and Human Services Practical Sense Facebook account. So if you haven't had an opportunity to look at it recently, I welcome you to do so. So congratulations, Priscilla, and thank you for a job well done. Capital projects, just 2 items on it this time. Phase 2 building project. Mark your calendars, October 23rd bid opening. So this is kind of a new process I'm doing and opening this up for both board members and the public to actually sit in and be able to witness bid openings. That seem to be a thing. So just to make things more transparent, if they just want to be part of that process, they are now welcome to do so. So October 23rd, I think it's at 2 p.m. It's on the county calendar. Parks Maintenance Building. There was a tour of the site this month. The project is now moving forward. And again, this is another one that will go off for bid and have a public bid opening. This is going to be done virtually because we are using MSA and it's, it's not going to be in person at all. So virtual option there as well. Other than that, are there any questions on the report?
Okay, and the expense report was also there.
John,
Yes.
if I might,
Supervisor Kubarski.
yeah, this isn't for the administrator's report, but can I go back to the treasurer's report? I just have a quick question for Kara.
Okay.
It has to do with, scroll up if you would. Okay, like the 4.36 on the investment pool, and then I think the other one was 4 point something. Are any of them, any of those locked in, Kara?
No,
Okay,
nope. And we've seen them, steadily dropping. They stayed the same from last month to this month, but we have seen a reduction in interest.
Okay. Then economic development, Sand Valley tour.
Thank you. Yeah, we have.
Thanks for being patient there.
Oh, no problem. I'm sending emails and trying to get some stuff done here. There's 6 attendees for the 9th at 2 and then 7 for the 13th at 10. So those will leave. If you go in the main entrance, there's one giant parking lot, the main parking lot. Those will leave from the main clubhouse, which is right next to that parking lot. Tours will take about an hour, and then there'll be pizza tasting in the clubhouse after each one too. So thanks to Lyanna's office for getting head counts, and I know Connie did a lot of work on that, so much appreciated.
Yeah.
Sand Valley was thrilled with the numbers too.
Do we get free passes too? Do we? Yeah.
I mean, you can ask, but
Ethics policy. Yeah.
I'll have to ask him because I remember him coming up here and talking to us years ago that, at some point during the year, residents would be able to get there and would be able to afford to golf there, but.
I asked that question, I was there, if Derek remembers, and he said that there's Adams County resident special fees at the end of the year
Okay.
and I remember, I know my son has went up and golfed in late October, right before they closed, they opened that up a little bit cheaper.
They got to advertise that a little better.
yeah, they don't. Those prices, even those special prices they still are not. I mean, you certainly wouldn't call it cheap.
I would say they're special.
Okay.
Derek, is there a bus going from here or just meet up there?
Just meet up there.
Mr. Chair,
Yes.
no, we have vehicles reserved through the finance department. So if you want to come here, we can ride together. If you want to just drive up there, that's up to you. Connie will make sure and verify that too, of who's riding with the vehicles.
Okay. Derek, you got to learn to keep up
I
here.
I don't know what's going on, I guess. Thank you, Lyanna.
Thank you, Derek.
Okay. Next meeting date, October 15th, isn't it? At 9:00 here. Otherwise, the next monthly meeting. Might as well set that right away, right? Oh, man. The county board meeting's the 11th, so it really won't matter, right? So 7th? Tentatively on the 7th? How does that sound? Of November? Hopefully, 9:00.
Does that give Diana enough time to put it in the budget, put it in the agenda? Yeah, she's shaking her head, yes.
Okay. Okay. No, we have nothing else. I'll declare the meeting adjourned. Thank you all.